Today, guys, we're going to be talking about forecasting, why it's such a powerful habit to be a successful trader longer term, why you should be doing it too, and I'm going to share some chart work and some tips for you on the screen you can implement into your own trading. No matter what system you are trading, you should be forecasting. And in this video, I'm going to explain exactly why. Guys, so let's take a look at some chart work. I think one of the most important things before I even get into this chart work is to understand the key part of forecasting is to remove anxiety. Anxiety is one of the leading causes of traders failing in the markets. Why? Because when you're anxious, it's the worst feeling in the market. And there's so many of these emotions involved. But when you forecast, you eliminate that because you have clarity and you have a plan. And I'm going to show you and demonstrate that on the chart as to what we've done previously and what I'm looking at in the moment right now. And then you're going to start to understand as to how you can implement that in your own strategy. So first and foremost, let's take a look. So this is my watch list for the week ahead. I'm currently looking at all these pairs. And not every single day I will look at them because sometimes they won't be ready, which is the part of forecasting. For example, here we have pound dollar. So pound dollar, we're looking for some buys in this area. And again, we were forecasting buys in this area from here. Even though you might be looking at it and thinking, well, there's momentum here. It's not about that. It's about understanding that you want to remove as much guesswork out of the market as possible. So what I find, and I'm seeing a lot of losing traders, is that they're always reacting based off what the market is doing versus planning ahead. Because when you plan ahead, let's say, for example, you mark this is your point of interest. It doesn't mean, right, we've forecasted that we're going to buy here, so as soon as price is here, we just buy. It doesn't work like that. There's specifics with our strategy. So let's say your strategy, you may have specifics. What we'll do is we'll work our way down into the lower time frames and be looking at, right, if X, Y, and Z happens, this is exactly how I'm going to execute on it. And with that mindset, you remove any of these impulses to just get involved in the market because you think, oh, it might go without me. For example, let's actually play out pound dollar. So with pound dollar, we was looking for this to break the low. And can you see how it didn't quite break the low? Very, very close. And I was talking about this in the Falcon webinar. One thing that I've noticed over years and years, and this is crucial with our own forecasting, is that, and this is such a valuable tip that I'm telling you now, when you see price action and it doesn't quite break the low or break the high, it works for both ways. 9 times out of 10, price will still come back down to break that low because you've got to understand the psychology of the market. People need to be caught on the wrong side before the big players come in. So when we see a near miss like this, why is forecasting important? Well, forecasting is important because we know that 9 times out of 10 it's going to break the low. So then it stops us searching in these lower time frames thinking, is there a position here or is it there? And as price plays out, you don't start deviating from your trading plan and start taking trades that are just not there, which is how most traders constantly give profit back to the market. They're always taking these losses. And in hindsight, you look back and think, none of those trades were in my plan. Well, why did you take them? Well, you took them because you didn't forecast, you wasn't clear, you had no clarity, and you probably had a bit of FOMO as well. So can you see how when you're forecasting, you remove all that guesswork because you know exactly what you need to do, where you need to do it, and when you need to do it. The other side of the coin is, well, if it was that easy, wouldn't everyone forecast and be successful? No, there's more layers to that, but that's the core. You have to be disciplined to follow that, but that's a whole other episode within itself. But essentially, when we saw that near miss, we had a very good inkling that price would eventually come back down to break that low. And at this point, right, even at this point, when you see the market completely push off, it's very difficult for people's minds to then accept that, or maybe I've missed the trade. This is where FOMO is involved in this. And again, this is where forecasting comes in because you understood exactly what you was looking for. And then long behold, price starts to trickle and then we break, right? So now we've broken the low. Exactly what we was talking about. So this is not rocket science. This is just observing price action and looking how it consistently behaves. And then eventually price breaks in. We're now catching people on the wrong side of the market. And eventually we start to look to those buy opportunities. If we go to the daily chart now, set this back. So price action is now getting people caught on the wrong side. And then we're moving to the upside. Prime example, right? Think about it. people are getting out of their sell positions, and now the buyers are stepping in. And now it's just about what and where do you get in on the lower time frame that hits the criteria that you need to trade. That's it. But if you didn't forecast, you would have get caught into so many average positions, losses and losses. And you probably find you do that as well. Let me know in the comments if you're consistently deviating from your plan and you don't really know why. Remember, it doesn't matter how you trade, you can forecast. You're trading support resistance style, you can still forecast. You just need to do one or two or three scenarios maximum, really. You want to have 3 scenarios as to your plan. So this is how I'm going to get in, this is what I'm going to do. And if price doesn't do that, you stay out, no trade. And you have to have discipline to be able to stick to that. So prime example on that on pound dollar. That's how forecasting there and then saved us from getting involved in average positions. So just a quick reminder, guys, if you're taking tons of value away from the channel, you've been enjoying our videos and you want to make sure that you are in the loop, make sure if you haven't already, you are subscribed to the channel, you like, you comment, you engage with us and let us know your thoughts on these videos. We absolutely love doing them and we want to make sure that you're in the loop. Speaking of value, we want to make sure, check the links in the description. We have tons of gems there that will improve your trading journey. So just a quick reminder to you guys. Now let's get back to the video. Cad Yen. The very tip that I just taught you is what I'm using literally right now with Cad Yen. So let's take a look at this. If we go to the 1 hour chart, this is where FOMO can creep in. So we've identified, right, I'm not going to go through the strategy, but just to keep things simple, we've identified areas in which that we want to sell Cad Yen, which is here and here. 2 areas, right? We know the specific things that we will be looking for in that area, but we have identified that we will be selling here and we will be selling here. What does price do? We are around, right, so we got about 12, 13 pips away from the first point of interest. Now price is down here. Does this now mean that you get FOMO and start jumping in? No, because the majority of the time, even price can come back all the way down to that low and then still come back up to tag these areas. So only forecasting would stop you from getting involved, because I'm telling you now, if you're inexperienced, you'll see price, you'll see movement, you'll see something around here, you'll get involved, it'll tag you in, tag you out, you'll take a loss, and it will eventually break the high and do exactly what we're talking about, because we consistently see that. So this is why, if you're not forecasting, you're actually becoming more of a slave to your emotions, because price is always going up and down. It traps people here and it toys with your emotions, and forecasting is going to help reduce that as much as possible. It may not eliminate it completely, but it will reduce it a lot. So again, prime example, I feel no FOMO. I feel no urgency to get involved in Cad Yen right now. It literally, I'm not phased whatsoever. I know that this is my point of interest and this is my point of interest. If for whatever reason, because nothing is 100%, it never gets there, I move on to the next trade. One trade is not going to make or break me. And that's a mantra that you need in your head. Not one bad day, not bad week, month will make or break you as a trader. So Cad Yen, another one, dollar yen. So, right, so we've been forecasting dollar yen. Dollar yen, we've been forecasting around these areas, right? So we identified our point of interest, which is we're looking at this area. We're looking at this 1, 2, 3 that intersects with this larger double top area. People will be getting out of their buy positions, likely seeing a bit of a sell off there, looking for the sell back down to the low. So we have a clear understanding as to the area value, and then we have more specifics in our own trading plans as to how we're going to take that. So it's very systemized in that sense. So when price is around here, do we feel any need to just jump in there? No, we don't. So then we're not feeling this anxiety of, should I get in now? Should I get in here? No, you just wait. You know exactly what you're looking for. Why? Because you forecasted it. You know what you're looking for. And at the moment, you can see price is moving down. Perfect, right? So price is not ready just yet, but I will be monitoring this today. So if we go to the 4 hour chart, what I would be looking for right now is a strong 4 hour close. You've got a bit of wick there. But again, in the next kind of 6.5 minutes, if we was to get that close there, we got a strong close, then I would go to the lower time frame and I would be looking for that entry to the downside here. And if we don't get it, I'll leave it alone, because price can extend. Price may go slightly higher and extend here before it drops for maybe a couple of weeks. But the key thing here is that forecasting is not just about you getting into positions. It's actually about keeping you out of the really average trades, in which that keeps you doing the break-even dance, or keeps you just going 2 steps forward and then 3 steps back. It's normally because you take trades because you just rocked up to the charts, you didn't get the right mental focus, you wasn't in the right state of mind, or you might have just woken up, checked your phone and thought, oh, there's an entry. How many times have you done that? Right? How many times have you just taken a random trade and then you kick yourself after thinking, I wasn't even looking at that, or I saw someone online looking at it, or I saw someone on social media looking at it, and I felt a bit of FOMO and I got involved. So many traders are doing this. So again, you have to build that discipline, which does take time, and you need to be around people that are disciplined because that will rub off on you. But really simple. And again, why is forecasting in this area so important? Removes all the anxiety. There's zero anxiety here. Price moved down, it was looking good, it's now wicked back up. There's no entry. I'm not looking for a trade right now, right? I can go down to the 15-minute chart. Nothing here satisfies the criteria of how I would take this position. So I just leave it alone. And then I wait. And maybe 3-4 hours later, it is ready. And then I will execute. And it's so much more enjoyable and stress-free to be able to trade that way, which is why when I see traders that don't forecast, I'm asking myself, why? Why would you not forecast? Why would you not make it easier for yourself? However, a great example, right? Kiwi Yen, a more recent one. So we actually took this on the live webinar, on our last Monday live webinar. So this was a simple one, and a really important tip that I really want to sign off with this episode for you guys is this. So we were looking at Kiwi Yen for a sell in these areas. Forecasted, very simple. 1, 2, 3, we're looking in that area. We had daily confirmation. Then we had our structures that we were looking for. And then what we did is we identified, just like I just explained to you on Cad Yen, we identified, let me just play that back, 2 points of interest. Where are those points of interest? They are here and here. Exactly the same as to what I just showed you on Cad Yen. Isn't it interesting, right? We're looking for the similar things over and over again. Now, because I forecasted that and I wasn't just looking for this area, I was able to capitalize on this. But if you didn't forecast that, chances are your mind is fixated on where you want the price to go. But price isn't going to go where you always want to go, which is why you need those scenarios. So then what we was able to do is see price for what it is. We've identified the areas. We keep it simple. We wait patiently. Price tags the first area. Then it comes down. Then on lower time frames, we'll go a little bit lower, and then we're looking for that entry. Entry is set. And then price plays out. And then I eventually get 4.4 out of this one. Other people took 5%, some depending on what your stop size was. That's irrelevant, right? It's all about the forecasting. So you see how if you didn't forecast and you only focused on, well, I'm only going to get involved in that area, well, then you miss out on this trade, which was really simple. But you only would have got involved if you forecasted it. So my question is to you guys is, how many trades do you potentially miss out on because you didn't forecast, you didn't have a plan? And how many trades are you getting involved in the market for no apparent reason whatsoever? So that's the part that I want you to take from why you should be forecasting. All the most successful traders in the world that I've experienced being around and I have coached that have become incredible traders have common habits. Forecasting. They know exactly what they're looking for every single time and they plan it, but more importantly, they're disciplined to follow it. But the thing is, you have to set the odds in your favor to win. And I think forecasting is probably one of the most underrated things that helps you do that. It should be part of your morning routine and should be part of your evening routine. Keep it very simple. This is not a long, elaborate thing. This is like 5-10 minutes, right? Simple forecast. You know what you're looking for. Get on with your day. One of the most appealing things about the Falcon strategy is the flexibility. We're not checking the trade every hour or every 2-3 hours. We know what we're forecasting. You can do your full-time job if you like. And then you just execute accordingly. For example, this was just an entry order. This was a simple one. Sometimes when you place a trade, we might not get tagged in for 2 to 3 hours, right? You might be asleep. You just put it, set and forget, go to sleep. This one was actually late at night. This was a prime example of that. Woke up in the morning, moved it to break even, then locked in profit accordingly to my management strategy, and we just kept it simple. And that is what it's all about. Forecasting is sustainable. And I want you thinking about that, guys, with your trading for the long run. So how can you be more efficient with your plan? You can use things like Notion, you can use things like Evernote, you can use a Google Doc. Just plan ahead and have something where you can visually see. It's going to help if you put your before and after, so take your screenshots so you can see, and what that will do is it will compound your confidence. And what I mean by that is that if you see repeatedly that, right, there's a before and after, there's a before and after, there's a before and after, and then you go through 3 to 6 months of your trading and you're doing really well and you have any kind of self-doubt, well, you'll eliminate all of that because you just go back and you see, wow, deliberately I've been forecasting, I know exactly what I'm looking for, and I'm actually sticking to it and I'm taking that. That builds massive confidence, and you need that if you're going to start going for funding challenges, you can trade high 6 figures, 7 figures. You need confidence. It's not going to be just your technical skill. It's all going to be in your mental. Most people can trade technicals. It's going to be your mental framework. So all of these things linked together. So you can see how important forecasting is. Guys, I really hope you enjoyed this episode and you took a lot of value from it, and let me know what you think in the comments below. Catch you in the next one, and I'll see you all soon.